It's that time of year again. When investors and Tesla enthusiasts alike hold their breath in anticipation of the number of sleek cutting edge Teslas that will be released this year. But here's the twist. It's not just about vehicles. It's about how you can use them to boost your portfolio and realize your financial goals more quickly. Today, as we examine the fascinating world of Tesla's Q3 deliveries and their heart-pounding influence on the constantly shifting stock market, we're delving into the core of innovation and finance. Get ready for an exciting voyage through the numbers, a touch of stock market drama. But wait, there's more. We have unique conversations with market experts planned, experts in finance and Tesla insider knowledge who will reveal the full implications of the stock market's movements, such as a triumphant tango or a cha-cha challenges. Before we go any further, be sure to hit that like button. So revenue figures that soar or silently park the garage, all of it is here inside the analysis and the thrill. And hit the subscribe button to receive this video, which is on Tesla stock news. With that said, let's go on to the next segment of the video. With an amazing delivery total of over 64,000 vehicles in July, Tesla's Shanghai factory has been making waves. This rise may be related to ongoing improvements at the Shanghai facility. Let's take a closer look at this quarter's productions and delivery. Might be quite the spectacle. As you are likely aware, I have a strong interest in Tesla and have followed its ups and downs. Let's talk about the Powerhouse, which is a test project in Shanghai that achieved an amazing 64,285 deliveries in July. But if there hadn't been any upgrades in place, that figure might have increased even further, perhaps beyond the 70,000 mark. Don't worry though. Those updates are a crucial component of the larger scheme meant to support Tesla and its stockholders' long-term profits. We all know that Tesla is all about long-term cars, and now that Model 3 production has started in the new Highland, there have been unquestionably significant upgrades. As we move forward to August, I predict that the upgrades will be fully underway, and while I'm sticking to a conservative 7 days, there's a chance they might extend it further, which could have an impact on daily production. As of right now, an estimated 2,500 vehicles, estimating that a solid 60,000 vehicles will be manufactured in August. September keeps things moving forward, producing a staggering 75,000 vehicles every day. Presently, let's head over to Fremont, where they set up 51,000 cars, discounting the Independence Day holiday in July. Due to possible modifications, August is trimmed by 7 days, resulting in a production estimate of around 41,000 vehicles. September continues to import little over 49,000 cars, and the 3-month total production for these 3 months reaches 141,000. Presently, Berlin is taking center stage. In July, 25,000 vehicles were produced at a rate of 800 per day. I'm hoping for a weekly rise of 6,000 vehicles in August, but keep in mind that this could change by the time this film is released. With a 7-day snippet from August, we're looking at about 20,000 vehicles, but with 27,000 automobiles overall. September keeps up the good work. Berlin contributes an astounding 72,000 vehicles. Okay, let's change the gear and go to Austin, where there is a noticeable buzz. Independence Day fell on July 1st, and 750 vehicles were produced every day for a total of approximately 22,500 vehicles. And August is a whole different story, so I'm being cautious. All factories are upgrading. So after 7 days from August 31st, we'll only have 24 days left, which will result in over 19,000 vehicles. But September is when I think the real magic will happen. I want to see Austin produce 6,000 vehicles a week, or about 25,000 vehicles. Day off for Labor Day weekend. Austin takes center stage with over 66,000 vehicles manufactured, which is quite amazing, in my opinion. It's time to add up the figures for a major unveiling. Shanghai's total vehicle output, excluding July's, approximately 415,000. Including Shanghai, might increase it to about 480,000. Okay? But for the time being, we'll set it aside while we wait for more precise numbers. After crunching the numbers, we're looking at a delivery rate of 95, which brings us to a staggering 393,918 vehicles delivered. If we include in Shanghai's deliveries for July, we're cruising past the 458,000 mark. I know I mentioned 466,000 on Twitter, but a double check brought us down a bit. Still, it's impressive, especially considering that the upgrades are the star of the show and the demand is real. Just take a peek at those inventory charts. The average selling price is expected to rise and increase in the average selling price, and a few other reasons are helping leasing and vehicle gross profits. Let's now discuss auto revenue, which excludes credits and profits. With an estimated $1.9 billion, energy is also in the spotlight, although the percentage is still at 18. Who knows? It might rise to 19 in Q3 due to operating costs, taxes, interest, and other minute details that are still in play with a consistent $450 million picture. These millions of dollars quietly grow it. Now that we've covered 450 million shares, let's get into the media Q3 numbers and see the prediction. Tesla is not letting this opportunity pass them by. There are quite a few cars being delivered, 4 5-8, 223 to be exact. Considering the larger picture, the overall car revenue may be somewhat lower than in Q2 because to the improvements that are temporarily affecting the level. We anticipate that these upgrades will soon ignite the production engines and cause the vehicles to be produced at a breakneck pace. Now, let's check under the financial HUD. With a gap of 2.9 billion and a non-gap of 3.3 billion, the expand gross margin for the quarter was stable at 18.2%, and the revenue is surging to almost 25.5 billion. Holding on to net income is also no minor effort. These remarkable data point to a solid bottom line. Conversing EPS at 96 cents, the non-GAAP figure appears to be stable. Wall Street is whispering about the low 70s, but as more information comes in, we might see that number rise. The performance of the Q2 is shaping up to surpass the previous one, but there has been a slight decline total EPS, which could have a negative impact on the stock price, which is currently trading at 250 with a P of 71. When the Q3 data are released, there may be a little market. If we apply the same to half ratio to Q3, we may see a slide to about 241 level that could attract some shrewd investors searching for opportunities. Fear and panic. Some people may be concerned that Tesla's market dominance may cause stock prices to decline. In fact, we may witness a price decrease below 220 with a P of 60, or perhaps as low as the lower 200s with a P of 55. Let's keep things grounded. A P of 75 looks like a fair option. However, if the market vibes improve with interest rate decreases and general confidence, we might see a brighter side. The stock could rocket to a P of 80 or 90, even reaching the 300 threshold. Maintaining a moderate stance is a prudent course of action that guides our attention towards Q4. Potentially the ratio. The point is that Q4 might be a game changer if Q3 enhancements take effect. We could see a monster 525 zero vehicles being delivered. However, don't be surprised if that number goes closer to 540 zero or even 550 zero. Don't miss the grand finale as we strive for an age, 18.3. Vehicle gross margin, similar to the strong coin results. If that's not amazing, consider this is energy profits reached a staggering $525 million with a total energy revenue of a cool $2.5 billion. I'm not sure what will happen, but get ready for what might be a show-stopping quarter as we approach. The big revelation for Q4, the overall revenue figure is approaching $30 billion. Has a rather excellent entrance net income and is expected to conclude the year strongly with a $4.1 billion non-GAAP compared to a $3.7 billion GAAP. As we bid farewell to 2023, we're looking at potential stock price $270 and $330 per share. As for the total number of vehicle deliveries for the year, we're on the verge of crossing the 1.9 million marks, maybe even surpassing it. But let's keep it cost for now. Let's talk about ending on a high note net EPS. Gearing up to hit a non-GAAP mark of 1.19. Now let's get real. If we're looking at fiscal year EPS of around 3.40, that's a bullish move picture. The PI ratio in the realm of 90 or even 100 with the stock price dancing around the 340 mark. Now let's keep our feet down. P of 80 seems like a realistic bet. That's all we have for today. If you liked it, please give it a thumbs up. And remember to subscribe to Tesla Stock News for more. Thank you for watching, and we'll see you in the next video. Year-over-year growth from 2022 to 2023 is now a respectable 42, given the upgrades in the shifting economic times.